everybody. We're going to take a few minutes to keep letting folks into the room. We're very excited you've joined us on this cold and rainy night, but I hope y'all are safe and sound and got your thinking caps on, because we have a very good, intense session tonight on farm taxes. This is something that folks asked for. It's a great time of year to do it while y'all are holed up and can get all your files together. I know that's what I've been doing this past week. So we're so grateful to have Lindsay Dills with us from Dills CPA in Waynesville. And she's going to introduce herself here in a minute. But of course, I want to introduce Powering Mountain Food Systems. We are an initiative of the Center for Environmental Farming Systems based at NC State and North Carolina A&T State University. My name is Laura Lauffer. I'm the project director for Empowering Mountain Food Systems, and I am based here in the Qualla boundary of the Eastern Band of Cherokee Indian. Very happy to be here in Southwestern North Carolina. So the purpose of our project is to improve regional food systems through education, entrepreneurship, and infrastructure. We are only working in that little blue cone of the state, and our goal is very clear: to increase farm and food business income. And part of that is managing your taxes properly. Our project sponsors are the Appalachian Regional Commission, a federal agency, the Cherokee Preservation Foundation here in the Qualla boundary, North Carolina State University, Center for Environmental Farming Systems, and of course the Small Business Center Network. This is a program of the Small Business Center of Haywood Community College, Southwestern Community College, and Tri-County Community College. I'm hoping that all of y'all are familiar with your Small Business Center. They are key partners with us to this work. So if you haven't already registered for this session through the link that Lauren has sent you, please be sure to also register through the community college, because they need to get credit for this as they're hosting us. All right, so let's jump into it. We really have a lot of information. I'm going to ask y'all to hold your questions. We're going to keep you on mute, and Lauren is going to help manage this. Lauren is our amazing admin director based in NC State, and she's going to manage the questions so that we can get them all at one time at the end, because Lindsay has a lot to cover. I'm also thrilled that Alan's here from Simple Life Farms. He's going to give us a real world example of how he's managing his taxes with a really interesting growing farm business. So with that, I'm going to introduce Lindsay. She is a CPA. When I first met her, we've been planning this for about 6 months. She came up on the screen and I was like, wow, you're a really young person. I always associate CPAs with kind of older men. And she's this vibrant, young CPA. And so we're just really thrilled to have her here. She's a graduate of Western Carolina University and Haywood County native. She's got her master's degree in accounting. I came to find out about her because Shelton Farms, they manage Shelton Farms finances, and William Shelton highly recommended Lindsay. So Lindsay, I really appreciate you being here. I know you've put a lot of time into this presentation. So with that, I'm going to hand it over to you, and just let me know and I will advance your slides. Thank you so much, Lindsay. And Lauren, thank you so much for helping tonight. All righty, go for it.
All right, thank you for that introduction, Laura. I appreciate that. Appreciate the opportunity to be able to speak to this group on a gray, rainy night in January. It is a great time to start thinking about taxes. What else are you going to do on a day like this? So first of all, let's look at these topics that we're going to be covering tonight. There was a previously submitted question about hobby farm versus business, so we want to cover that briefly. A lot of our time is going to be spent on entity selection There's going to be about 5 slides on that. How to possibly save taxes. There are cost benefits that you would need to consider in that decision. Going to cover depreciable assets, property and equipment, present use value assessment on your property taxes, a little bit on sales tax, retirement options, bookkeeping, payroll, and some 2021 tax season filing issues to think about as you gather your information to prepare your 2021 return. So with all of that, next slide, please. We'll jump right in. And again, this is based on a question. I want to make sure that people actually understand that you're going to be in a business situation here, and you should treat your farm formally, not just as, well, a hobby. One of the questions I think was, going to buy a couple of sheep and see how it goes. Well, you need to be a little bit more sophisticated than that. I do prepare returns for people that have a very small farm, and everyone has to start somewhere. So don't let me discourage you from taking that first filing step. But notice how the IRS defines what is a farm. Somebody that's going to file Schedule F either as an individual, trust, partnership, S corporation, LLC, engaged in the business of farming. And that's pretty key. Intention, if you consider yourself in a farm business, is probably going to be the number one aspect about whether you have a farm. Now, along with that formality and that intention, taxpayers need to understand you could be asked to account for your farming activities by substantiating them in a number of ways. Timesheets, mileage logs, bank accounts, even a business plan comes into play sometimes. I'm not saying all of those things are necessary, but if the IRS is questioning your legitimacy, you should be able to prove that you are not just a hobby, not just a handful of chickens in the backyard. That's not going to cut it. So you do want to consider all of these ways that you devote a considerable amount to your farm. Don't try to make it up years down the road to answer a notice that comes from the IRS. You see my comment here, don't create an unjustifiable farm for the tax loss. I have people that have done that, and it's questionable as to how legitimate is this, but it is up to the taxpayer to prove all of your activities, all of your involvement. Remember, hobby loss, you're supposed to show a profit 3 out of 5 years. I do not see the government pursuing that rule hard and fast, but they could. So just be aware of that. Also, if anybody has any horse farms out there, you see the horse trying to eat the money as it flies away in my graphic. So horse farms are a favorite audit target of the IRS. So just be aware the standard is even higher on those horse farms. All right, next slide, please. All right, so this is going to be the majority of what we talk about. Entity selection. And please bear in mind, your entity is a legal structure. That's the number one issue, is what legal structure do I want? You do have options in some cases, particularly when we start talking about the LLC. as to exactly which tax form you are able to file. So in the slide here, I've got the first three: sole proprietor, a partnership, or an S corporation. Either one of those may be structured as an LLC, which stands for limited liability company. This area is also heavily involved with legality. So you might want to talk to your attorney and your accountant about which one of these structures to actually choose. I give you the tax savings side. An attorney is going to tell you the risks and benefits of choosing each one of these. Another way I like to describe this to people, especially if you're thinking about an LLC, see my little fence down there at the bottom. An LLC is basically a fence around your business to help protect you from legal liability. It's not a concrete wall. You can penetrate the fence. You can go over the fence with some legal issues. Limited liability, not no liability. I often tell people, rather than relying on an LLC for total legal protection, one of the best things you can do is make sure you're properly insured. An LLC does separate you from your business, and that is important to draw that distinction. But just like a fence that can be crossed, if you get sued, this is not total defense against any lawsuit. So make sure you have adequate insurance coverage. All right, next slide, please. When we talk about tax savings and which entity you're going to select, the biggest topic is self-employment taxes. Choosing to file as an S corporation can save you self-employment tax if you structure it correctly. Self-employment means you are the employee and the employer. Everybody has worked a job, and you notice the Social Security and Medicare tax that's withheld off of your W-2. Behind the scenes, the employer is also equally matching that. So when you're self-employed, you have to pay both parts of that Social Security and Medicare tax, also commonly known as FICA. And that is going to add over 15% just in self-employment taxes to your tax bill, just that. In addition to income taxes, if your income is high enough. So as we go further and talk about this S corporation, which is very popular among a lot of small businesses, farms, all kinds of entities really do like the tax savings that an S corporation can afford you. So I just wanted to give a brief overview of self-employment tax and why it's so expensive. It's 15% added to profits unless you take some steps to change that. All right, next slide. All right, so the easiest thing you can possibly be is a sole proprietor. You just start and you're going to report. Now, most people are going to certainly get a tax ID number, because if you don't get one of those, you're using your Social Security number, and that's not advisable from an identity protection standpoint. So even a sole proprietor would likely want a separate tax ID number for their farm. And if you're going to have employees, you have to get one. Also, adding to the legitimacy and the formality of your business, you need a business bank account. I understand when you're just starting out, you might want to You might be tempted to just run a few transactions through your personal account, but honestly, you do need to separate business from personal, and getting a separate business bank account is the next step in creating that separation. Revenues and expenses are going to be reported on Schedule F. That's just a schedule included with your 1040. So no separate business filing. You file a 1040, and part of it is your Schedule F. Even as a sole proprietor, you might choose to go ahead and become an LLC. It's not necessary. I see people doing both all the time. Maybe they want to go ahead and just get that LLC established for the name, and again, to further separate their business activities from their personal property. You might go ahead and get an LLC even as a sole proprietor. Other pro about this is that you don't have to go through the complexity of payroll unless you have employees beside yourself. So revenues, expenses, and that's pretty much it. Notice in the cons column, the very first thing is the self-employment tax that we've already talked about. If you're filing as a sole proprietor and you have a profit, I'm stuck with this self-employment tax. I can't make it go away. There's the minimum is like $400 in profits. So if you're making any profit on your farm, pretty much, you're going to be subject to this self-employment tax. The owner specifically does not receive a W-2. However, that Schedule F does serve as your compensation. My other bullet point there is limited options for retirement. We have a slide on that later, so I will circle back around to that. All right, next slide, please. All right, a partnership is not too much different from the sole proprietor, except this is now two owners instead of one. Again, may or may not be an LLC. Certainly at this point, you would have to have a tax ID number. You're going to have a business bank account, and there is a separate tax filing for this. Again, if you just had two owners, and they were the only people working in the business, you would still not necessarily have to do all the payroll complexities. But again, that's more than one person usually indicates an increasingly complicated business. One thing that people don't like about partnerships, it is very difficult for me to explain a lot of the aspects to that. It's just a complicated entity that is set up to handle numerous partners contributing all kinds of different assets to the company and constantly changing ownership percentages. It can get very complicated, and on top of that, the self-employment tax comes back around to the owners. So that's really two strikes against it. I don't see many people staying a true partnership for very long. Most of the time, once they become profitable, they are going to make that jump to an SCorp. But again, if you have more than one owner, this is going to be your default filing. All right, next slide, please. Okay, so finally we get to the S corporation here, which is very popular, of course, for the tax savings. On my pros there, I've got that you must be an LLC or a corporation, and that's true. The only entity type I cannot make an S corporation, or excuse me, let me rephrase that. I'm not making you an S corporation. You're electing to be filed as an S corporation. So an LLC elects to file as an S corp, and a corporation elects to file as an S corp. If you do file an S corporation tax return, that does not automatically incorporate you. You can still be an LLC, an underlying LLC underneath. At that point, you would have to have a business bank account, a tax ID number. The downside to this is that it can get difficult to administrate. Unlike the other types, you may have noticed my bullet point that owners are not allowed to receive a W-2. Well, in the S corporation, owners are encouraged, if not required, to receive a W-2 from their own company. And the reason this gets tricky is because you put yourself in a position where now you are constantly remitting payroll taxes, filing quarterly reports with various government entities, and making all of this match up to a W-2 to the owner at the end of the year. That's very difficult to learn how to do by yourself. You almost have to be in a situation where someone is able to teach you, or you got to pay somebody to do it. And if you're paying someone to prepare payroll, now you're eating into your tax savings. A separate business tax return is required. This can be very beneficial, especially the more profitable your farm is. Here is my rule of thumb, and this is not official or anything. This is just what I see in returns that I prepare. If you expect to make about $20,000 or more in profits, and you expect to be in business for 5 years or more, a S corporation can really pay off for you. Now, if you're making less than $20,000 a year, or if this is a short-term thing, it can still pay off. But just as the years go by, it's going to be more worth it for you to go through all these complexities like payroll. I mean, if you set all this up only to be in business for 3 years, you've barely gotten started, and now you're having to shut it down. That's my point in saying that. But I have plenty of people that file that S election the very first year. They want to go ahead and capture any savings from the beginning, and they deal with payroll either through paying somebody to do it, or learning how to do it themselves. The big savings there is that you are able to allow some of your profits to not be subjected to self-employment tax. You are able to access the profits of the entity either by a salary, which does come off of that W-2, or from draws that do not have to go through that calculation for Social Security and Medicare and the other reporting. I guess that's all we need to say about the S corporation. I won't be surprised if I don't get some more specific questions on it that we circle back around to. Yeah, go ahead to the next slide. Depreciable assets. Had some questions about what can I depreciate, what constitutes a capital asset. This particular slide is just the definition straight off the IRS website. Of course, it must be property that you own. You must be using it in a business setting. It's got to have a determinable useful life. That's basically that it's not an abstract item. And it is expected to last more than 1 year. So if you're using some kind of hand tool, even if it's very expensive, and you typically go through at least one a year or thereabouts, there's no reason to necessarily depreciate that. We don't want to have every shovel, rake, and hoe on every farm on a depreciation schedule. That's unnecessary. We just write hand tools off as a supply, or something like that, and you still get the full deduction. So next slide, please. All right. Accelerated depreciation options remain the same or similar that they have been last year. Two tools that people use to really enhance their write-offs for assets, tractors, equipment, all kinds of things are Section 179, and I've got some rules there about maximums on those. Also, in the past, it was particularly enhanced in 2017. Bonus depreciation is an accelerated method. Either one of these two allow us to write off large amounts of expenses on the tax return in a single year. So in some cases, I'm trying to just generalize here, but I have plenty of farmers. They buy a $50,000 tractor. If they have the profits to support that, we are able to write that off all at once in a single year using one of these two methods. There may be exceptions to that, but it's just a way to very much encourage people to upgrade and replace their equipment, and you get an immediate tax write-off for it. All right, next slide, please. All right, these are just some examples of useful lives. Land cannot be depreciated. That's pretty important. We do keep track of it from a historical cost basis. The premise there is that land usually appreciates, and therefore the IRS is not going to allow you to depreciate an asset like that. Unlike, say, a truck that the older it gets and the more it's used, the more it's going to decline in value. So all of these first items here, except for the last one, you could utilize the accelerated depreciation options that we talked about in the previous slide. Let me point out something that's very specific to farmers. That next to last item, a single purpose agricultural building, does have a recovery life of 20 years. Now, if you build a barn and you're going to use it for storage, you're going to have some stalls, you're going to keep your hay in it, that's where the tractor gets parked. That's not going to cut it for this 20-year recovery life. That's what we call the general purpose, which is the last item there, recovered over a very unattractive 39 years. But if you build something that has a single purpose, I know one example I have seen is a milk barn. The only thing that's done in that barn is to milk cows. There's no other purpose besides that. That's an example of a single purpose building recovered over 20 years that you can take advantage of the accelerated item, write that off in 1 year. Again, you'd want to talk to your tax professional about that. The single purpose is key. Next slide, please. All right. Here we're going to talk about present use value, and this is your property tax deferral. I think most people are probably taking advantage of this, but you do, I mean, there is a standard. You don't automatically get it. I walked over to the tax assessor's office, and I just asked them general questions about it. There's quite a number of forms. It does take some paperwork. You see there, one of the items, 3 years of farm activity must be provided. So again, this is to prevent people with 12 chickens in the backyard from saying, I need to claim a property tax deferral on some little piece of land that really doesn't qualify for. So you do have to provide a Schedule F as proof of all of this. One thing that people may not realize, if you go to sell the property and taxes have been deferred and the new owner does not plan to use it for farm purposes, you are going to get charged back 3 years for the full value of the taxes. So that might be a gotcha there that some people are not aware of. And I don't know, maybe the only way to look at that is at least you got the years that you got with reduced property taxes. So there is an application available either at the assessor's office or North Carolina. You can qualify under forestry. I looked at that briefly. The forestry one just seems to go on and on as to how to qualify for it. Agriculture and horticulture was more straightforward, as you might expect that farm use would easily qualify, or more easily qualify there. All right, next slide, please. Okay, sales tax exemption. You know, they cracked down on this a couple of years ago. It seemed like it was just so easy for people to say, hey, I've got a farm, no sales tax for me. But you actually have to prove that you have farm income now in order to be able to qualify for a sales tax exemption. Again, people with 12 chickens in the backyard, they need to be paying sales tax on their chicken feed and chicken coops and whatever else they've got. This is really to benefit full-time, fully engaged farmers that are a bigger business with that $10,000 in average annual farm income. That first item is sales tax exemption, so that's on the paying end. Now, if you're selling, you could be subject to sales tax on items sold. Let's take a look here at these bullet points as to who does not have to collect sales tax from customers. Products of a farm sold in their original state by the producer of the products if the producer is not primarily a retail merchant. And so this is meant to people that are just going to, pull a truck to the end of the road and sell some corn out of it a couple of weekends a year. If it's your product and that's the circumstance, you're not going to have to collect sales tax. However, if you have a produce stand that's operating all summer long and that ends up being more than 50% of your revenues, the state says you're a retailer even if you are selling your own products. So watch out for that. Live animals are exempt from sales tax. Uncooked cuts of meat are exempt. If you're having cows processed or hogs processed, that's fine. You can cut it up. So you don't have to worry about selling the whole side of beef to a single person. You can cut it, you can process it, but that's about it. It still has to be raw. The state specifically says sausage is considered a prepared meat. So really, other than cut it up and put it in the freezer, there's not much more you can do to it, or it becomes a prepared food that you must collect sales tax from. Raw produce may be sliced, shelled, or cut up, but if you start adding anything to it, I think they even mentioned salt. They certainly mentioned herbs and spices. If you do anything to that raw produce, it becomes a prepared food, and you must collect sales tax on the sale. So if any of those items apply to you, you're good. Otherwise, you're going to have to collect sales tax and remit it from your customers. Make sure you are paying that in on time. You don't want interest and penalties from paying it late. Also, if you're collecting sales tax, please make sure that matches your tax return. All of that paper trail needs to line up there perfectly so that it gets reported in both places. All right, next slide, please. I mentioned earlier we would circle back around to retirement savings options. It's last here because we certainly needed to talk about entity types first. The entity type that you are can determine which type of retirement savings option you are allowed to participate in. So, for example, a sole proprietor oftentimes wants to take advantage of a SEP savings plan. It allows you to contribute up to 20% of profits to your retirement plan. So that can be a very large number, or it can be a very small number. And with a profit-driven calculation, it changes from year to year. You would never want to make that contribution before you determine what your profit is, because you could possibly make a contribution that is either not allowed or that you actually get no savings from. There in the first bullet point, I point out that you must have a profit in order to have a tax benefit. So you can contribute to a retirement plan, but if you don't have income that's being taxed, you actually have no tax savings from your contribution. The more complicated your entity is, and again, once you've gotten in there with the SCorp, you might have employees. You just have more options the bigger and more profitable that you get. I certainly take the deduction and I help people with this, but if you're really wanting to look at retirement options, you need to form a relationship with a broker. I am absolutely prohibited from giving investment advice as an accountant. So I can't tell you what to invest in. I can't open accounts like that. You're going to have to form a relationship with a bank or someone else that would help you narrow down those options. Watch out if you have employees. If you're an employee of your corporation, remember, everybody's got to be matched at the same rate. So don't get the idea that you can match yourself at 10% and the employees only get 2%. Once you're an employee, that's not how that works, and you need to treat everyone the same as far as matching and as far as developing rules for participation. Next slide, please. All right, bookkeeping and payroll. we get a lot of questions on this. People want to know, what should they do to help organize their records and prepare for tax time. Don't bring me a box of receipts. In fact, I might not even take it depending on how busy I am. So it is important that you are summarizing and recording your transactions in some logical manner. I've got the number one rule up there at the top. You need to use the system that you understand the best and you are willing to invest the time in learning. And down below, I do have some options there about QuickBooks, which is extremely popular and very widely used, and certainly we use it here at the office. Many people do. I have a lot of people that have told me over the years, I bought QuickBooks, but I never got around to learning how to use it. You wouldn't believe how many times I have been told that. If you're not going to invest the time in learning how to operate that software, now I say don't even bother. If you come to me for tax preparation, I need for you to be neat. I need you to be organized. And if a manual system, i.e. pencil and paper or simple spreadsheet, is the method that you understand the best to stay organized, that's exactly what you should use. Just something to think about there on that. Other than QuickBooks, it's hard for me to recommend too many other softwares. I just don't see a lot of other softwares that are being used by very small businesses. Let's see, I guess next slide there. Payroll and reporting. Again, we touched on this a little bit earlier, talking about the S corporation, and that now you could possibly be an employee of your own corporation. Someone's going to have to devote the time and energy here to making sure that payroll is correct and that it is done in the appropriate amount of time, meeting deadlines. As I show that bullet point there, the worst way to discover you have done something wrong is to get a notice from the IRS. So if you don't know what you're doing, you're either going to have to pay somebody or you're going to have to invest a lot of time to figure the payroll component out. All right, next slide, last slide. Yay. All right, 2021 tax law changes. The most prevalent item, I think, so far is the advanced child tax credits, which people have been receiving for the past 6 months. It's going to be critical that that is precisely reconciled on the tax return. I think a lot of people may be surprised that their refund has been cut in half or eliminated, or at worst, balance due, because they have gotten all this money earlier. Maybe some things have changed in the year. Maybe they didn't qualify for it anymore. A child grew up. I think it could be rough for some people. Wanted to mention, of course, with the flooding that came through, Western North Carolina was a federally declared disaster area. One of the first things that this declaration allowed was the extension of some fall deadlines in 2021. However, it does open up the possibility for people that have been affected to have a casualty loss on Schedule A. Of course, you could also have a business loss that could be a factor as well. So if you have been affected by the flooding Now, it does have to exceed 10% of your AGI, so it has to be significant. This is something that you're going to want to talk extensively to your tax preparer about and make sure that this is done correctly. COVID tax credits and benefits continue on the 2021 tax return, but they are constantly changing, ending. New ones pop up, but not if you've already had help before. So really, you have to just ask. I think the most important thing is, if you've been affected by COVID yourself, your family, your employees, is that you mention this to your tax preparer and let him or her know the circumstances to see if there's anything that might be available. And fourthly, I've got forthcoming 2021 tax law changes. What I mean is tax changes that are retroactive. I hope it doesn't happen. I was listening to a webinar just a little while ago from folks at the national level of our CPA organization. Two striking things. They said the IRS is expecting this to be the worst tax filing season ever, and that we should all lower our standards when it comes to dealing with the IRS and trying to solve problems with them. Well, that's not exactly what anyone wanted to hear. I'm sure people have already experienced problems with the IRS that has never really rebounded from the beginning of the pandemic in early 2020. So, I wish I could end on a little better note than that, but I guess that is the end of my slideshow there.
Lindsay, that was so thorough. We really appreciate it. I have one question, and I know that Lauren is aware of questions in the chat. Do you know which counties are eligible for the federal disaster funds?
Well, I know Haywood, Buncombe, Jackson, Graham. Basically, it was the spine of the North Carolina border that was officially declared as a disaster. Now, as far as the northern counties up towards Boone in that area, I don't really have many clients up there, but the Tennessee border counties were pretty much all included in that disaster declaration. Maybe Transylvania and Henderson as well, because of the way all of that rain came through in the southern mountains. I would need to look it up to be sure.
Right, but Haywood West, I don't know that we really had impact out here, in Jackson, Cherokee, Swain. So just folks, don't assume that you, if you're outside of Haywood County, you might not be eligible. So Lauren, would you mind asking the questions, or I guess I could in the chat. I will open the chat and ask the questions. All righty. Do you have to file a Schedule F? Could you file a Schedule C? Are there any disadvantages to either of them?
The ultimate tax computation for a C and an F is exactly the same. They both get hit with that self-employment tax, that nasty self-employment tax that we have talked about. One of the main differences is that F is going to be so specifically geared towards farmers. I mean, there is a line for fertilizers and lime. There is a line for veterinarian and breeding fees on Schedule F. Schedule C is going to be so very general that you would end up having to detail a lot of those expenses by hand. So why not just use the farm specific lines that will help you categorize expenses more logically for a farm.
And what's the rule for having a Schedule F? It's that you have what about the amount of income from the farm operation? No.
No, it just you just have to be, you have to consider yourself in the business of farming. And I know that sounds very unstructured, but again, intention is very key. So if you consider yourself to be in the business of farming, you need to report your revenues and expenses on that form.
Okay. All right. Let's see what the next. Rosemary, did that answer your question? Do you have a follow-up? You can. I don't know if I can unmute you or not, Rosemary. We'll type it in, Rosemary, if you need to. Will the presentation materials be distributed? Yeah, we are recording this and we will post it on our website. Okay. Mark is asking, can land improvements like drainage still be depreciated on leased or rented land?
Yes. Yes.
All right, fantastic. Okay, well, I don't see any other questions. You guys, I mean, we did do a really good job of asking folks ahead of time what they wanted to learn about. So, so maybe we did a good job of covering all that. So now I'm going to thank you, Lindsay. You did a great job.
Thank
really
you.
Appreciate you so much.
We got one more quick question in
Okay.
the chat. From Brian, I sell pastured poultry and pork. I have been taking tax sales and paying it to the DOR. Is the only thing I need to ask for sales tax is the actual sausages? I may have butchered that a little bit, but that's in the chat box.
Let me look at it. What you do have to be aware of that retail aspect. So pasture poultry and pork. I mean, yeah, the chickens, I mean, obviously the chickens are plucked and perhaps cut up, so that is allowed. I mean, maybe we look further into the sausage and make sure that, bacon, if you have a seasoned bacon, have you crossed over the line there? I'm afraid so. That is so bizarre that the Department of Revenue has singled out sausage, but I guess that's where they had to draw the line. Again, I would say, where are you selling it? If it's, as long as it's not going to cross over that 50% level as a retailer, yeah, that sounds good. You would need to detail that out. You really ought to have an item by item sale to show this is sausage, this is just plain ribs. So yeah, that's correct.
Okay, great. Well, Alan, I've got a couple of questions for you. You can take yourself off camera if you want. We've been working with Alan for a while, and he is growing his farm business. He started out with an amazing campground, and he's added bees to his operation. Now he's expanding his orchard, his apple orchard, and he's adding Christmas trees. And so as he has done these steps, he is, looking at his business structure and, maybe having some tax implications. So Alan, can you talk to us a little bit about how you have structured your business during this phase of growth? Thank you.
Thank you, Laura, for the opportunity. Yeah, I'd love to share. So my campground's been up and running for about 11 years now. And the dream was to introduce the farm aspect of the campground. So now it's a Simple Life Mountain Retreat. So it's a retreat where people can come and visit a farm. So over the past fall, I went ahead and opened up another 4 acres to be able to introduce about 50 more apple trees up on the side of the hill, as well as double the apiary. Because I started with about 30 apple trees across the property, but the idea is to increase that on locally grown apples that are known for Western North Carolina. And the bees started with a couple hives, and last year was up to 7. So this coming year, planning on doubling that as well. But the Christmas trees is all new. Diversity is the key there, because sometimes you don't have a good honey year. Sometimes you don't have a good apple year. Well, Christmas trees are a little more durable, especially in the mountains. So the plan is to plant about 500 a year over the next 5 years to have a continuous, stable crop coming in every year. Again, the bees, you never know what those ladies will do to you, sting you for sure. And the apples, we had a late frost last year, so it wiped out my apple crops. So you need to have a sustainable business. So that's where I was heading for the farm. But it also, I know Laura's been involved with this, is agritourism. People are interested in coming to a working farm. And my guests that we get coming through are just intrigued by hearing about the farm activities, and they don't leave without buying honey or apple products like apple butter. They just love the idea of coming and staying on a working, operating farm. So I've developed it all together in one system. I know we don't have a lot of time, and Laura wanted me to mention how do I handle the tax situation, since that's what it's about tonight. Well, over the past couple of years, I've been looking at different softwares. You develop an LLC, you get those up and going. Last year, the LLC was to help, with Laura's help, develop the LLC for the farm, the Simple Life Farm LLC. So I have separate entities for the campground and a separate entity for the farm. So they're both separate. They both stand on their own 2 feet to a certain extent. So when there's an improvement to the campground, that's the campground. When it's the farm, it's the farm. So I keep those separate. And you're like, well, how do you do that? Software. I was able to get a hold of a software that I can manage both aspects of the campground and the income that comes into the farm, like the apple butter or the honey sales. That goes into the same software underneath the guest's name. So I sort of have an idea of what guests buy what, which can help me in the future to go back and say, hey, I've got additional, would you like to buy it? So that's helped. But at the end of the season, I have an outstanding CPA, accountant, tax lady that I've been with for probably 20, 25 years. And I'm able to compile all my receipts, which I can't speak high enough about saving your receipts. Holy cow. Yes, I have a file folders full of receipts throughout the year, but I compile it and put it into a spreadsheet that she can see and understand. And with COVID, I end up mailing it to her through email, all my spreadsheets with my totals. The bank takes care of their part for the LLCs. They're both separate, so that helps. I can give her those. Mortgage payments, tax payments, everything. I can send everything to her in an email, and she and I will talk over the phone. And my spreadsheets, they explain all my receipts to her. And if there's something new, she explains that to me. And I try to explain what I was thinking or where I might be going. And she's also enlightened me on some new laws, which I appreciate her going over those, because they're constantly changing. And I've done a lot of land development, a lot of land improvement. So there's a lot going on with this little farm. That's a little bit of an overview, Laura. What else?
Thank you, Alan. And so one of the things I did want to mention about a Schedule F, Rosemary, while I'm thinking about it, is sometimes you're more eligible for funding opportunities if you file a Schedule F. So for instance, with the Ag Options Grants, you get an extra point if you file a Schedule F. It means you're a real farmer, and it helps with, I'm sure, farm service as well. So Alan, have you been filing a Schedule F?
So last year was the first time. My lady, because the LLC was developed July last year, but come from the honey. Not a lot of income. Really no income from the apple trees, but there was honey income. But over this fall, yeah, I've got a lot of work. I've been working on this property in 2021. So, and there was more income from the agritourism side, and from the honey sales, and from the apple sales, the apple butter sales, because there was some of that as well. So it was a pretty good year for the farm this year. There won't be anything for the Christmas trees, but that's about the depreciation of the property that I've been developing. And I'm keeping up, because you have to correct me if I'm wrong, Lindsay. I'm keeping up with the cost of the Christmas trees and the fertilizers and what I'm doing. And that all goes into the profits, off of the profits of the Christmas trees in 5 years when I start selling them. That's how I understand it. Let's put it that way. So
yes. So thank you, Alan. And we're a little bit past time. Does anybody have any questions for Alan? He's obviously, got his system down. He's working with a CPA that he trusts and has helped him watch his business grow. Does anybody have a specific question for Alan or Lindsay before we move on to our next topic here? All right. Well, I encourage y'all to go out to see Alan. Check out the Simple Life Farm Facebook page, and it's a wonderful campsite. And you can learn about bees too. We also have he's got a great video that the chamber did. The last thing I'll mention is we do require you to fill out an evaluation for us. That's what our funder loves, and that's what I love and Lauren loves, to find out how we can improve this process. And next week, same time, we are going to have the session on farm sale platforms to sell your products online. So I'm definitely going to have somebody who's going to join us that's going to talk about research she's been doing, but I'm hoping to also find somebody who's already engaged in that process. So, but we have a whole series, and if you're on this email string, we're happy to add you to our newsletter list and our listserv. If you're interested in ordering a bulk order of organic potatoes and you haven't seen anything about that yet, hit me up in an email. I'll put that in the chat. That order is going in, but that's one of the cool things we do, is we really are supporters of mutual aid. So this order is going in this week for a really large order of organic seed potatoes, if you're interested. But thanks again, Lindsay, and thank you, Alan. I really encourage y'all to go up there and visit Alan. He's a wonderful host, and Lindsay did a fantastic job being extremely succinct with some very, very helpful information. So everybody give Lindsay and Alan a hand. Thank you all so much. And thank you, Lauren, for helping us manage and managing registration. And of course, your small business center. And I will tell you, if you need that training in QuickBooks, go to your small business center and see if they've got it. It's free. It's free. They give you free business counseling. So this is a lot of people don't realize what a great benefit we have in North Carolina. It's really one of the best in the country, our small business center network. Alrighty, folks, and stay in touch with us. You know, we have plenty of support for you. We got another year of funding. So if you don't know about what we do, please reach out to me. And we look forward to seeing you next week, I hope, in the series. But thanks again, Lindsay. Thanks, Alan. Good night, everybody. Stay safe out there.
Good night. Thank you.
Thank you, Lindsay. Thanks, Alan.